Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Just an FYI, my Wi-Fi at my work has kind of been dropping on and off already twice today. So if I drop out, just I'll be back in quickly after that. But just a heads up. So today we'll go through the market update the earnings trades, and then Joe has his analysis, so we'll do that at the end. So let's get started. Okay, major indices, SPX, NASDAQ, Russell, Dow, all still in state one. Um, pie wise, just a slight increase from last week, up like 2%. We're right near that 45 percent for state one. So we're, teetering on the, overbought area as far as the chart. So, last time we got up a little above 50 here, 48, kind of drop downs, but never didn't really cross over. It's been holding above 40 for a while here. So, but we're getting right near that level. As far as the other states, not a lot going on. You can see the twos have kind of dropped a little, and those have gone into one. Nothing major, and some of those eights have gone into seven, but it's just not a lot of movement as far as state transitions and stuff like that. So um, that's kind of where that is. Still showing bullish here. We're getting lots of greens, new highs. So that's bullish for the market. So as long as that continues, we'll be looking good. Um, let's look at bullish bearish. So we got all the way up to 83, 84, and got down right around 50 and it held. So since then we've been kind of slowly walking up. So obviously the market's been doing well outside of a few days. So we'll just see if that can continue, see if this can keep climbing or not. No promises. Data wise, I think obviously the Fed's like 3 weeks away, but we did have some like GDP and core price. That was like zero point 0.1 higher than expected. Tomorrow's going to be a pretty big data day, so that could definitely move markets. The price index year over year, stuff like that. So if those come in hotter, obviously I would expect the market to pull back on that. But if they're in line or right around there, should be okay for the market. So let's look at SPX. Been a long time in state one. It's a really good one. November 14th. Seems like a while ago. So 71 days, 43 average. So, definitely crushing the average move. That's the all-time high move, 19%. So, we're actually in that neighborhood. So, uh, yeah, I think here we're kind of off the chart, right? So we'll go look at the actual chart. um, so I think the key thing that, I've been watching is that 5,000 level. Yeah, that's the, I guess the bottom of the range now. We had 46 to 5,000, so this would be 5,054, which would be way up here. We just have to keep holding this 50, this 5,000 level. As long as we stay above that, we can, this market can continue running pretty strong. So, that's, downside wise, 5,000 is kind of like the key that I'd be watching for SPX. So sorry, it's just off the chart, so. Yeah, and well above, all the moving averages, 50 way above that. So Russell's a little tighter. So let's look at Russell. So to the upside here, I'd kind of watch, can we break this? We've been in state one more than the average time. The high so far is 2071. Tried to get up there again. So if it can break above there, and then it's going to have some resistance in this range, target one, target two, and that's the actual top end of the range that we have for this 21 to 19. So sorry, this tool's acting up. 21, 19. So we've pretty much just been bouncing around. Obviously, on the upside, we got above this entry price. So, to the downside, we want to stay above that 2022. Upside, try and break this high here, and then then we'll get into this, which will be pretty strong resistance, I would imagine, just because it's a typical resistance range, and it's right on the number for the top end of this current range. So, but that's kind of where we're at there. Let me clear that out. Let me go to the chart. So, see if I can pull it out a little more. Yeah, so it's been almost a year since we've been up around that 2100 level. Excuse me. Sorry. So here's the range, 19 to 21. So we got this 50-day as support. Obviously, this 200 is well below, but that's another kind of downside support level we can look at. So entry price, which is 2022, and then this 50-day, which is below there, that's at 1967. So that's been a good support all the through this run up from November. So that'll be a key support to the downside. And if we can make a run up to 21, see if it's been a long time, but I'd expect resistance there. But if S&P staying above 5,000, then it's definitely possible. The other kind of key driver for this is the rates. So clear that. The rates are pretty much hanging right around this 4.3. So this could move a lot tomorrow with like inflation numbers and stuff like that. So it's definitely climbed from with huge moves. This is like not very typical treasury market, but got all the way down to like 3.8, climbed back up. So I think data tomorrow could definitely move this. If inflation comes in hot, then the rates could go up higher, and that will definitely drive down Russell, probably S&P. So we'll have to wait to see what those numbers are, but they will move the markets, I would guess. So let's look at Fed tool. So we're 3 weeks out to the next meeting. That's 20th of March. So pretty much no cut. May, same thing, no cut right now. That's kind of since last week moved a little bit more towards no cut, so it's about 80%. So June, that one you can see is pretty much flat from last week. Still expecting June to be the first cut. So one other big kind of change is the year end. So that one's moved. A month ago, that was quite a bit. That's 1.25. Yeah, 1.25 point. So now last week it was 1, and now it's 75 basis points for the cut. So this has definitely been moving. We used to be back here kind of averages in high mid threes. So big changes. So now it's only 3 cuts this year. So that's kind of a big change. From we've been tracking that. So
So
we
Josh,
talked. Yep.
I interrupt for just a second there. So I just want so it went from 5 cuts to 3 cuts, basically, and
Hmm.
prices have gone up. So how do we square that with valuations? Does that mean that we should expect higher valuations for longer now, or the new valuations are higher than the old valuations, and that's the way it's just going to be? That's what it sort of feels like.
Yeah, well, I mean, the most correlated, index is the Russell. It moves kind of opposite to this. So, those valuations haven't really, I mean, look at the chart, right? Those haven't done anything, right? Whereas like the S&P, I mean, this is what,
Right, I hear where you're
two
going here.
years? I mean, 2 years is pretty much flat, right?
Right,
Um,
Russell may be in state one, just like S&P
mhm.
and Nasdaq, but it doesn't feel like they're in the same states. It feels like the
Yeah,
Russell different state than the other two indices.
right. Yeah, I mean, the rates and there's a lot that goes into asset prices. So, cost of capital is only one part of that, for, people getting, like loans and all that, bonds. So, that's only part of it. So, it's not like a direct correlation, in my opinion. So, but, it's definitely, there is a correlation, but it's not like heavily weighted, I would think at this point. Um,
Josh, have we talked about the percentage of companies not making money in that Russell 2000 group?
No, you found that stat out. You can tell them. I think
Yeah,
it was.
yeah, there was, and I forget. I mean, at this point, I believe it says, and I forget what the source was. To be candid, I'm not sure if it was FactSet or who it was, but I think the percentage was 58% of the companies in the Russell 2000 are literally not making money. And going back to, I think it was 2015, that percentage was only about 15%. And I should try to track that down again, because that's, to me, just very material to your point, Dave, why it seems to be, acting so much different from some of the other averages. But yeah, it's something, a while back I had read, and Josh and I talked about it briefly.
Yeah, and I did find a interesting chart. So there we go. Top 10% of stocks by size versus the entire stock market. So this is like the concentration of the entire market in the top 10%. So you can see, back here, .com, we got up, 70s, and we're back up there right now. So, thing driving the market are the big names, right? So that was an interesting chart. So we're going for the record back here in the 30s. That's almost 100 years ago. That's crazy. Anyway, thought it was an interesting chart. So okay, so that's Fed tool. Yeah, balance sheet. We're getting near that kind of magical percentage. That'll probably hit next month. Like I said, yeah, I had a little drop off. We're almost at 7.5 trillion. So I don't know if that'll have any problems or not, but a lot of things kind of coming to a head in March. With that bailout from Silicon Valley, that little windows closing for them. So just kind of be on the eye. Keep your eye out for that. Any kind of bank overnight lending stuff just kind of popping up. That could be problems. But yeah, I think that was it for market. I'll open up to questions, comments. Okay, no one else. All right, I'll go through the earnings trades real quick. So I think we're done with bullish pre-runners for the most part. We had one closeout. That's a slight loss, that cake. So that closed out before the earnings. So far, we had two kind of minor losses, 7 wins, up, making money there. What else? Bullish runners. Oh, making good money here with one loss. We had two, no, this one closed out. Palo Alto, for a nice profit, quick trade, in and out. Overall one loss, kind of minor, and 5 wins, so looking pretty good there. The bearish runners are, they've made a little comeback. We're about flat on these trades. And we're down like 100 overall from 50. So we got, 6 open, 2 up slightly, a couple down decently. And we had 3 closed out. This one, these 2 closed out after the last meeting. So, they both hit, all these hit the profit target. So we'll see if we keep this momentum going with these trades. But 6 open there, those were the only open ones. Only other trade that closed out was a vol rise. That was Amberilla. So these are 2 for 2. Disney didn't hit the target, but got pretty close. Amba, did hit the profit target. So 2 for 2 there, and we know the non-movers did well. So that was it on earnings so far. We'll have, let's see, 1, 2, probably in this neck of the woods, get the next earning plan, 13th to the 20th, one of those 2. We'll have it by then. So almost wrapping this one up. So far, it's been, pretty good. Any questions, comments on earnings? Okay. All right, Joe, I'll hand over to you.
Excuse me.
Hmm?
All right, Josh, got it. Hi, everybody. See, just a couple charts to go through today. And, as Josh pointed out, obviously SPX, NDX, long-time state ones, as I've said many times, and I hope you guys feel the same way. It's always fun to plug into the platform and see what has changed. And so we got oil and we've got gold, both going into state ones last night. So I'll pull up those charts, towards the end here. But, interesting to see those type of transitions. And then just, without doing any homework, you just start to think about, wow, what might the implications be for, the oil market having maybe a tailwind, and, average state one is, over a month of trading days, certainly. Gold, makes me think of Bitcoin. The old, they talk about the risk on, risk off trades. Certainly that Bitcoin, if it is a trade, been risk on and, flying high. I think the thing might be north of 60 grand at this point. And I think it just sort of speaks to the bullish environment and the liquidity that's out there. Obviously, there are all kinds of specifics with Bitcoin and the new ETFs and all of that. But I think, more broadly, it just speaks to the bullish nature of the markets at this point. So let's, last Wednesday was National NVIDIA Day. So I thought, we should at least take a peek at the chart, now that it's behind us. But have you ever heard so much conversation about, the earnings of one stock? I'm not sure that I ever have. And, as we all know, we got a pretty good sell-off. into the earnings number. We talked about if there was going to be, meaningful downside, we would have thought that the state 3 target would have held that. We got a pretty good sell-off, but, not that far down. And then lo and behold, we got the big gap up. And, the reason I just wanted to pull this chart up in addition to all the hype last week was just, look at the last 5 days. I mean, it's just basically holding these all-time high levels. So, very impressive, and guessing it will continue to be. The comments that the CEO, talked about, in the meeting afterwards was, pretty impressive. Lot of glowing comments about, future business, that's for sure. SPX, just, Josh covered it well. We're at 71 days again. So one thing we've added, we've had the max percentage move, in SPX, it's 2011. I had just kind of thought that the max days would match the max move. That was, kind of silly on my part, but, I was doing some NDX. I think maybe we had talked about this. So we have added, when the max days happened, in addition, to what we already have with the max, percentage move. So again, it's a snapshot to give everybody the opportunity to go back and focus in on particular time periods, in the history of, your index or individual stock, going back in 2007. The equal weighted S&P ETF. So we're banging right up against state 3. How does the ship do it? But we're banging here. And the all-time high is just a fraction under 165. Okay, so I think, that might be something to, keep an eye on. If we're going to get another upward leg in the market before we get either continued sideways or a downward, necessary correction, I think this might be something pretty good to keep an eye on, this RSP. NDX, really nothing new there, just, length of time, long way to go in terms of all-time days, at 145. I'd be twice where we are almost, so we shall see. XLK, always worth pulling up, and, we're going sideways here, but there are no real meaningful pullbacks. You got a little bit of a pullback, with the NVIDIA in advance of the earnings last week, but these are shallow pullbacks. So, very, very constructive market. Apple, I think, is one we talked about last week, and that 180 level being important. As it turns out, it traded just below 180 yesterday. And then I'm sure many or all of you saw this headline that I guess Apple had spent 10 years, looking into, electric vehicles and things like that, and have decided to pull back, from that initiative after 10 years. And stock rallied, almost 3 points on that news yesterday afternoon. It's given most of it back today. I think the stock's traded about 180.5 right now. So, not that it's, a big deal, because I think if this thing's going to back and fill a bit, what do you get? Another, 5, 10, 15 points max to the downside in Apple, but I think that 180 threshold is one to keep an eye on, just in terms of maybe the overall health of the market short term. TLT, because we're in state 8, I just thought it'd be worth pulling up. So been there for 6 days. We get 27 on average. So a long way to go in terms of time. I just wanted to pull up the chart, just kind of laying around, not much going on. Josh talked about that and always does. Mentions that 10-year, markets seem to be handling the 425, 430 10-year rate without any problem. So, as you pointed out, we've got the inflation number tomorrow, I think, along with a bunch of numbers, really tomorrow and Friday. So we've got a pretty good opportunity for, the market to maybe break out of this sideways chop, which, if it went on longer, that would not be unhealthy in my mind. Not at all. The USO oil, just went into state one. We talked about this being a 5-wave pattern to the downside a while back. It's had, subsequent mildly higher lows. So, yeah, looks constructive, and how much of a tailwind that could be for the markets over the next, month or so, we'll see. Last one, GLD, I mentioned, Bitcoin earlier. GLD, I've never really paid much attention to gold. I'm certainly was never a gold bug. There are a lot of them out there. But we're in a state one, and I think more than anything, that kind of reflects the move in Bitcoin. But, what's the average move? 7.5%, in state one in 34 days. So, see what happens. Not a big gold fan myself. Last thing I just wanted to talk about briefly, back to the pie. So, and I'm not suggesting for a second that we're anywhere near the top of the market personally. Excuse me a sec. I'm fighting a cold, so try not to hack into the phone. But, I've often, looked at the pie as kind of a leader for the market, not really a short-term indicator. And so I went back and I pulled Cindy helped me out, pulled the top 50 composite bullish pie readings. And so, because I basically, going into this, I pretty much knew the answer. But I just wanted to see what the numbers said. I wouldn't have expected the pie to be at all-time highs at tops in the market. It just doesn't seem to be the way the algorithm works. So, it is the left-hand column, I should point out. That is the total bullish. We got all the states on there, bullish, bearish, what have you, but just focusing on that second column in bullish numbers. The top 50 readings range from basically 92 to 85. Okay, 92 to 85 are those top 50 readings. But frankly, and I hadn't done this before, not really that surprising to me, or that, those top 50 are centered around just a couple years, okay? And those years would be 2009, there were 16 all-time high readings, out of the top 50. There were 16 of the top 50 readings of the pie in 2009. There were 6 in 2010, 12 in 2012, okay, and that was January, February. So you're talking 2009, 10, and 12, and then nothing until 2020 and 21. So, the point, for me is just, let's not be, looking at the, waiting for the pie to get up into the 80s to suggest that we're going to be, at all-time highs and basically, trying to pick tops. Okay. Those periods were kind of foreshadowing, big moves in the market coming out of 09, 10, and then 12. 12, that Jan Feb was, after we had that sell-off in August, September of 2011, when the credit rating of the U.S. got beat up. So that's where I think the 12 numbers came from. And then you go all the way out to 2020. In 2020, it was just before the election. You know, there were 11 readings in 2020, all in June, you know, where we were, you know, 88 to 92 on the bullish pie. And then, you know, we had some early in 2021. Now, obviously, the markets basically topped about a year later after we had 6 all-time high readings, you know, on the bullish side of the pie. So, again, just let's not be using the pie as an indicator for a market top. The other thing I did was I pulled, Sandeep, you know, pulled and, you know, looking at what is it, fourth column over, state ones. And Josh is always talking about, you know, we're overbought at basically 45, you know, when it comes to the state ones. Well, you know, the top 25 readings, you know, going back to 2007, it basically ranged from 72 to 77 in the state ones. And then look at that left-hand column to see when that was. Again, it's pretty isolated. You got 2021, and really it was early 21, you know, and it was 8-10 months later, you know, when the market, you know, ultimately, you know, did make that meaningful top, and then you got a spattering of 2010. So, you know, the pie, I'm kind of infatuated with, Sudhir. You know, I do love, you know, looking at the numbers inside of the pie and wondering what they tell us. And, you know, the takeaway and the thing I just wanted to mention today more than anything was, you know, let's not be looking to use this pie as an indicator for a market top whenever that happens. You know, hopefully Josh and I are doing our homework and we have some pretty good insights, and, you know, not that we're going to pick bottoms and pick tops. You know, it's about, you know, being on the right side of the trend. But one thing I won't be using is, you know, the pie as an indicator for trying to figure out when the markets may be getting a little long in the tooth, you know, from a pricing perspective. And as long as earnings keep kicking rear end, and I think, you know, that's what's keeping this market, that coupled with the liquidity, I think that's what keeps this market so strong. I don't think there's any end in sight at this point. You know, could we get a quick 3 to 5% pullback? Of course, we can get that anytime, but I don't think there's anything meaningful coming to the downside. Happy talk to anybody about any points. Otherwise, Josh, we'll go back to you.
This is Dave, Joe. I agree with you on the kind of like wiping out the downside risk after the NVIDIA earnings report there. I certainly was taking off all the downside thoughts that I was making for my trades. But as far as the pie goes, you know, it might not be the best, like, really short-term indicator, but it seems like it was, if I was closing my eyes and listening to you as you were talking there, it almost sounds like, though, it might be a fairly decent lagging indicator by about 3/4 of maybe things to be watching for, maybe, on the pie.
Yeah. You know, certainly in that 2021 period, Dave, it would suggest that. You know, I think the Fed changed the game, you know, with all the rate increases and the fight against inflation. But, you know, maybe, yeah, you know, that idea of, you know, 3-4 quarters out, you know, I think it's worth digging into it a little bit more, but 100%, not a short-term indicator. But, you know, when we get to those extremes, you know, that's when I think, you know, the odds are really in our favor, you know, based on what the numbers are.
Yeah, I just read something just before the meeting here about Morgan Stanley pounding the table yet for a hard landing and a hard recession to come. Just well, we don't know when, but yeah, you can say that about anything. There's going to be some recession sometime in the future. It might be a decade from now, for all we know. But that's a big bank still. And Jamie Dimon's not so enthusiastic about some of the future directions on some things. So I think there's got to be some confluence, all the stars are aligning around some fact that we don't see yet or can't see yet in the future that's going to cause us a tilt away from the current uptrend. It feels like we're back in the 2010 to 2020 range again with 10 years of, well, it can only go up for the most part, most of the equities. So there's not much fear in the market right now. So I'm trading the trends myself. So I don't see anything hanging out there until a couple of quarters from now. We'll see.
Yeah, and the election's a long way off, obviously. And now, it's just going to be month-to-month numbers because, as Josh said, earnings are pretty much behind us, and we are going to get a lot of numbers in the next couple days specifically. And I'm always a big believer in seeing where the market closes, and as I mentioned more recently, starting to pay attention to those Friday closes to see the net change for the week. But I always like to see what the market does in that last 30 minutes. Do we close on the highs? Do we close on the lows? It tends to help me with just trying to look forward.
Yeah, momentum's going to carry us, I think, for a while.
Great. And one other thing, I talk about this oscillator from time to time, S&P oscillator. That's essentially neutral at plus 1.6, at this point. So, just very neutral. So a lot of potential upside. Downside as well, but, the momentum seems to be to the upside.
Okay, thanks, Dave. Thanks, Joe. Anyone else? Questions, comments before we wrap it up? Okay, well, thank you all. We'll do it again next week.
Have a good week, everybody. Bye-bye.